Hello, I'm Shaun Richards of Notayesmaneconomics, and I have some thoughts for you today about Italy. For those of you that were following social media last night, this won't be news. For those of you that weren't, it might be. There were some announcements out of the proposed coalition government, and these hit and come in right to the core, and not only the European Union project, but the euro. What do I mean by this? Well, the opening salvo that came out was that the coalition government would quite like a 250 billion euro write-off of debt. Now, there's various ways of looking at this. Firstly, could it be done? Yes. The European Central Bank or the Bank of Italy, depending which way you want to look at it, holds somewhere around 368 billion euros of it, so there'd still be some left over. That in itself is not an issue. But this poses quite a few questions here. One is straight on my beat, which is the issue of what's called monetary financing. What this means is that a government issues debt and the central bank takes it. So this takes out all the bothersome issues of things like that, of actually having to find people to buy your debt and this sort of thing. And this is where this is getting very close to it. Why do people think that that's a bad idea? Well, as we look around, we don't have an enormous number of examples of this, but one I looked at a few years ago was Ghana, where the central bank bought the debt virtually straight off the government. What happened? We saw quite a drop in the currency. So the two consequences of it are inflation and a lower currency. Inflation comes through two routes: lower currency, secondly, higher money supply. Looking at Italy specifically, this gets more complex, as of course it's part of a big group. But what do we all think is going to happen if Italy gets a debt write-off? They might not even get the letter in the post or email, whichever way they're doing it, before the Greek one comes in. I'm sure Portugal would like one too, and I'm sure you can all think of other examples. So this is the issue here, and it also comes back to the core concept of the European Central Bank. Is it there to finance this? Article 123, if you don't know which one it is, specifically prohibits this sort of thing. However, these things get a little bit complex. We've heard so many times from Mario Draghi, the president of the European Central Bank, that it's a rules-based organisation. Problem with that is it's broken quite a few of them along the way already. Will this be another one? It does pose a few questions. If we just stick with the economics here and where this is heading, to my mind, if you look at some of the other suggestions, which for example are for a flat rate tax, although that's classically Italian, because it seems to be flat rate with some variations, which obviously has its own flaw, but that will imply more spending. They took a pension reform. Well, we know what that'll mean, so more spending on pensions. Italy has not very good demographics going forwards, so that there'll be more spending there. And as you roll through their sort of wish list, we discover further down the line, if you look at it, but there's a situation where they want to renegotiate some European treaties. The opening ones will be ones on spending and things like that. And just for clarity, Italy isn't what you think that it is, perhaps, which is that fiscally it's quite conservative. The reason why its national debt's ballooned away is that the growth's been so low. And here we come to the nub of the matter, which is, in essence, since it joined the euro area, Italy's been in an economic depression. One of the ways I measure that would be economic growth per head, and there hasn't been any. In fact, in general, it's shrunk over the period. Bit better phase recently, but it's still down. And this is the problem, because of course it was supposed to have things that you're familiar with, economic convergence and more growth. Instead, it's found itself in quite a mire, and this is what's led in some form to this particular coalition, but the concept of things being unhappy there, and this is what's now playing out. In terms of markets so far, they've been quite sanguine. But remember, the European Central Bank is buying. Italy is a reasonable part of the euro, but there's still plenty of other parts to it. And also, in these things, there's invariably a shock effect. People look at it and think, oh, maybe that won't happen, which is true. I'll ignore it for now. These things always have a lagged effect later. But this will eventually, in one way or t'other, play out. Either they'll do this at least in some form, because clearly there'd be changes before it ever started. I think the one thing we could be reasonably sure of is that they'd spend more. Governments don't tend to start on that and then U-turn, do they? But then this implies out as to further things as to around the euro area, if they impose control, like they've managed with Greece. Remember, Greece tried to break away and then found itself sucked back in. But again, can they keep Italy under that sort of situation while they're doing that and problems elsewhere? So I think there's a lot to think about here as to how it will play out. If they let Italy have it, then as I said, there'll be more in the list. So in a way, this is a typically Italian mess because they sort of want to follow the rules and then not. And that is the situation that we find ourselves going forwards. Those of you that follow social media and look at the thing of, there's a debate recently, or would you believe, in translations of restaurant menus in Naples from Italian to English. And one of those that went round, which had some glorious things like tuna to the grasshopper on it, ended up with the last one on the list, which they'd translated as bullshit bark. And that, in essence, is where Italy now and its new coalition government finds itself looking forwards to the euro, to the European Union, and what happens next.